the chart returns to established highs heading into the mid 20,000 range, where there's this formation which can be considered part bearish engulfing and part Harami, which highlights the neutral to bearish sentiment persisting around this range. Conveniently, resistance can be well defined by these levels at nice round numbers near the open high, low and close prices of these neutral to bearish candles, at the center of yet another bearish reversal at this range, which is now recontacted yet again, and instantly there's an ideal example of a bearish Harami reversal quickly taking form, with the first candle being a large green real-bodied candle and the second candle being a large red real-bodied candle fully contained within the first candle's real body range. And immediately there's a steady row of red candles consecutively closing lower with consistent selling volume. After that, there's a minor bullish retracement taking place, originating from a morning star structure where all three candles have inverted hammer characteristics. Indeed, it's actually a strong upswing with potential to develop into an uptrend continuation if there can be a few consecutive closes over the established resistance range, which is unlikely to happen following these recent developments, which have formed another quick downswing, incorporating elements of an evening star and bearish kicking pattern. Along the way, the past upswings can be used for referencing support that can still oppose the strong drop for short periods. Here's a less common Harami variation, but it still ticks the boxes for the candle structures. Notice the green bearish shooting star has its real body fully engulfed within the real body range of the large green real-bodied candle before it, to represent the quick change in sentiment from highly bullish to neutral to highly bearish. Often, even when the second candle has a relatively large real body, the upper wick, while still generally short, could still be noticeably longer than the lower wick, representing weakness in sustaining higher prices, similar to the bearish shooting star and gravestone doji candles, to lean the candle pattern more bearish, albeit to a lesser degree than the bearish shooting star or even gravestone doji. So it's not too surprising price wasn't pushed down too much. Naturally, there's resistance upon returning back to this range, where yet another Harami forms. The second candle is quite close to a strict dragonfly doji candle, but since it forms in front of rising price, it's more similar to a hanging man candle, with the lower wick showing intent to drive price down. This low defines the low of the whole Harami pattern, and as usual, once price begins maintaining a presence under this low price, development towards a downtrend becomes more likely. In the process, a solid resistance level is also identified, lining up quite nicely near the real bodies of candles from both these Harami patterns, where unsurprisingly there's also more volume with those candles. Then, after some delay, 117.76 is finally recontacted with a bearish Harami candlestick pattern. Shortly after, price becomes even more volatile. Price does close over resistance, but it's only for one candle that is in fact a bearish shooting star within the middle of an evening star structure that's even confirmed with bearish kicking price action to strongly send price down in a relatively short time. When price does recover back up to the major 117 level, there are actually a good number of closes above resistance. However, that takes place amidst at least 3 bearish Harami patterns that have direct contact with the 117 level to demonstrate the continued contention and indecision around this area that maintains the tendency for the market to drop price back down if no quick breakout over 117 takes place. To the next example showing technical analysis with the bearish Harami candlestick pattern in a less common situation. This all begins with falling price being halted by a large green candle bullishly engulfing. This is immediately followed by a bearish shooting star candle with its real body fully engulfed within the real body range of the large green candle, which essentially defines a trading range where everything after the large green candle is a sharp downswing since that's where resistance for the range is concentrated. And the bearish Harami characteristic comes from that row of falling candles being fully contained within the real body range of the large green candle. And in the broader context, the trading range is a neutral to bearish area within the larger downtrend. As price drops below and moves above this area in the future, it still has some influence in slowing down price. Since there was a strong and volatile bullish acceleration prior to this bearish Harami pattern, it's not too unusual to see a delay to a downward reversal, even though price has been moving under the bearish Harami's low. More decisive confirmation of the shift towards bearish sentiment comes with this dark cloud cover candlestick pattern,